Hello and welcome to the Stock Planner channel. Today I want to talk about T-Mobile. I'm using Verizon as my mobile phone service, but T-Mobile is the other guy. Very popular in the United States. Provides phone service and internet service throughout the continental USA and Puerto Rico and Virgin Islands. The company was founded in 1994 and headquartered in Bellevue, Washington. This video is going to be short and sweet. We'll do some analysis and outline a possible option play. I'm going to try to make this video a little shorter, so let's get started. Remember, do your own due diligence. T-Mobile, over the last 7 days, has been down a bit, and 5%, nearly 6% for the year. But it's trading at a great value, 62% below its estimate of fair value. Earnings are forecast to grow by 18% per year. That's great. And it had a great year over the last year, where earnings grew 257%. All the analysts that cover this stock are in good agreement that this stock should rise by 30%, 29%, almost 30%. Of course, any company this size has a large amount of debt, and there's some insider selling occurring over the last 3 months. That's a risk. The competitors are Verizon, as I said, and T-Mobile. What you look for a company with the big green snowflakes, the greener the better, and you can see this pale yellow. So it's got some issues. Healthy, good value, decent future, decent past. If you're looking at price to earnings ratio as a way of evaluating the stock, then T-Mobile is way overpriced amongst its peers. Verizon seems to be a good deal. But if you look at the discounted cash method, then another picture emerges. The fair value of this stock, when you talk about all the free cash flow that your company might have, this fair value should be up to $359, and it's currently trading at $136. The blue line is revenue, and it's slightly growing. And the aqua line is earnings, slight upward trend. Company amongst its industry and market. That seems nothing to worry about for earnings. And the company and industry, as far as revenue growth, is about on par. No dividend. 52% is owned by public companies, 41% by institutions, and then we got the private ownership. I want to mention that 30 analysts cover this stock. These guys are paid to do this job, and they're saying that the target price in 1 year is going to be $177, up from $136. Looking at a TradingView chart for T-Mobile, ticker TMUS, on the daily time frame. Each of these bars is a day's worth of data. The first indicator we're using here is a zigzag, and you can see this perfect. Picks the tops and bottoms perfectly. But how does it do that? Well, it looks to the future and paints these later on, sort of like Monday night quarterbacking. But I use this indicator to pick other indicators that might tell me the same story, that don't repaint themselves. For instance, this is the MACD, this is stochastic RSI, and this is the RSI. And the RSI, when it goes below the 30 and comes back around, stochastic when it goes below the 20 and comes back around, and then I start looking for bullish plays when the MACD is below the 0, but crossover is good too. When they all occur at the same time, that gives me an indication that might be going up. So what we have now is we have the RSI crossing over the 30, going up, the stochastic crossing over the 20 and going up, and we have the MACD below the 0 line. It may be crossing up soon, I don't know. Earnings is past us, and we had 2 days of bullish type candles. And this is sometimes called a fractal too. This is what these are too, fractals. 2 on this side, 2 on this side, and then 1 in the middle. That's what this is. 2 downward candles, 1 in the middle, and 2 up. So, is something occurring there? I don't know. Nobody can predict it. We did the fundamental analysis. It says it looks good for the long term, maybe November out. And if it stays above, let's just say 133, 132, we have a winner on our hands. Who wants to take that play? Let's see how it looks in options. So going out to November 17th, we're looking at a bull put spread, which is a bullish type thing. And as long as it stays above 133.45, we have a winner on our hands. And that should be right about here. And you can win up to 155 in this play. This, by the way, goes right in your bank account right away, $155. You have to have a margin account to do this, and you have to put margin reserve of $500, and you could lose up to $345. Your max profit is, of course, the net credit. And if you want to take something in between here, this is your playing field. And here's your losing. If you don't know how to do a bull put spread or bear call spread, that's the two ones on their credit spreads. There's plenty of information online, and I also have some in my YouTube account. So, as long as we say about 133, we have a winner on our hand. 133.50, somewhere in that area. That's the net number. Based on our indicators, they're saying up. The stochastic, the RSI, all set up a few days ago. And this trade looks good to me. I have to look to you. Leave a comment below in the description. Like and subscribe. We'll catch you on the flip.